Right, let's talk about today's or last night's move. I don't normally post on the weekend, but it's quite aggravating to see price dip below stop loss. So the few topics we're going to be chatting about will be alongside not only trading and forecasting and predictions, but it'll also be with trading itself. Now, in these environments, it's okay to take a loss every once in a while. That's just a part of trading. It's a part of the game, and it's something that you can't really avoid at the end of the day. So let's just try and ascertain what the structure should have been here and maybe why this happened. But today, what I want to talk about more so than that is how to protect yourself in the right way. Okay. Let me just start there so we don't have to spend too much time with this video. All right, as I made mention to, this is the kill zone. We got confirmation. So your entry point would be there. And then afterwards, you would have written it up. My target was out there. But if you were looking for a 1:1 risk reward ratio, how that would look would be if you entered at that point, you would have exited at that point, and depending on how you trade, you could have doubled your money. All right, so that's what 1:1. So to describe it differently, if you had $10 into this trade, you would risk $1 to get 11, or to earn a new dollar, right? So if you had $10 and price action went below there, then it would have left you with $9. Or if it had gone to target, you would have got a 1 return. So 1:1. All right, so this was a 1:1 trade. I honestly didn't anticipate it to crumble the way it did. I thought it would be a 1:2, but let's just use this market structure for a bit of education, just so you're prepared for it should it happen in the future. And this is how you guys should be setting your trades. It's having the correct confirmed turning point, then having correct entry points based on price where it exits the kill zone, and that'll differ depending on the size of the move because of the scaling of your tool. And then the your exit, your take profit would be either at your 1:1 or your 1:2. So if this was moved up a level, and I'm going along this y-axis here of the Gann tool, then that would be 1:2 because you're risking $1. So if you put in $10 and you hit a stop loss, it'll take you to 9, but you're risking that for $2 additional. So you have two options here. If you set your target up here, you either have it so that it takes you down to $9, which would have been the case here if you're aiming for a higher target, or if it had gone to this target, you would have got your $2 from your $10 in return. So that's how risk reward ratios work. So risking 1 for 2, or 1 for 1, or 1 for 3. So if price came out to this range, it would have been a very good 1:3 trade. That's obviously risk reward ratios. Now, just to have a look over here once again. So we've been speaking about market structure during the week, and of course, this big vigorous action had to get consolidated at some point. It did so in a symmetrical triangle. It left the triangle, which I thought was a good sign, but then it dropped back into the triangle. Okay, so basically this entire period over here, since from I'd say the 14th of March, and today's the 13th of April. So for the last month, strictly speaking, this is a no trade zone. Right. So this is where and looking a bit sexual there. So let me remove that. So this period over here is when you're in a symmetrical triangle is a no trade environment, and that's where the mental strong discipline comes in for traders who are sticking by the rules. And if you had caught this earlier on, then you would have avoided these shadow trend directional switches, and then avoided this mess. So to that I say, it's still not ideal trading conditions. Over here, this was great. That was necessary. This was great. This was confusing because it stopped early and then it stopped early again. And now we're seeing we're in a symmetrical triangle. And we once again are faced with some crumbly, weird market structure. So if you've taken on any unnecessary losses for the last month, that's the explanation as to why. And of course, this is where everyone's a hero. I mean, everyone can make money when the price goes up, but it's with the rest of what the trading experience offers is how you keep the profit that you've made and you don't run into frustration and losses and so on. Okay, so what next? To be honest, I don't want to touch the chart right now. I think it is quite crumbly. I'm not really impressed with this market structure. That could be turning point 1, 2, 3, 4, 5. No, wait, sorry. 1, 2, 3, 4, 5, 6, 7 should have happened out here. That doesn't seem to be the case. This is a very early 7 otherwise, and then maybe something down there. The other alternative, just very much in a freehand manner, and I won't again send it up now because it's a Saturday. I've got things to do, but the could be top, bottom, top, bottom, top, bottom. So there's a few options here, but what remains is that this over here is a no trade zone. So anything underneath it becomes progressively more difficult. Now, before I jump off, I do want to say that the 32 minutes, which is the feeder into this chart, could have given us a heads up if I had that open. So as I'm working on AI coding instead of charting and trading at the moment, I'm not doing it myself, but I advise it for you though to have the 32 minutes as your feeder chart. So the information that comes in, and then obviously your 512 as your look ahead chart. So you know what's coming up in terms of dominant trend direction. And then on a more macro or micro, I wouldn't say micro, but just on a more responsive level, have your 32-minute feed in what the next play is, because as you know by now, every quadrant is a cycle for the lower time frame. So that's 20 points. 1, 2, 3, 4, 5, 6, 7. It's on an 8 to a 9 by the looks of things. Very, very freehand. Or it could be 1, 2, 3, 4. There's a double top there. So, I mean, 3, double top, 4, 5, 6, 7, depending. I don't want to commit to anything, but that's the idea. So 32 minutes, your lower frame feeding into your trade chart. So this is where you make your decisions. And then your look ahead chart giving you the overall of what is happening up top. That's it for today, guys. I hope you have a great weekend further, and I'll catch up with you on Monday. Ciao for now.